Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here with Steve Penny of the SilverChartist. SilverChartist is a subscription-based service that follows commodities, specifically gold, silver, battery metals, and our favorite, uranium. We've been a member there for almost 2 years, and their mission is very similar to our own, and that is smart capital allocation that allows for increased cash flow and early retirement, so that we can spend our time pursuing that which makes us feel most meaningful. I highly recommend it. Steve, thank you for coming on the show.
Thanks for inviting me. Looking forward to a good conversation. Normally we interact over on the SilverChartist website, so it's kind of nice to meet you face to face. I'm looking forward to a good talk.
I am as well, sir. I am as well. Okay, being that this is your first time on the show, if you could give us your backstory, how you got into investing in precious metals and how that led to starting SilverChartist.
I grew up, from working parents. They were house painters, and they always struggled with money. And part of it, of course, we're always responsible for our own decisions, but they never had any education. So I kind of partially blame the education system for not teaching people about finances, personal finance, how to invest wisely. Instead, what they teach you from an early age is that you need Wall Street. You need Wall Street professionals to help you. And, I observed that growing up, and I saw my parents always struggling. So that kind of put a seed in me that I want to learn. I want to learn how the game works. I want to learn the rules of the game. So I've been learning this for a long time since I was a kid, but really in the last 20 years, and really kicked up a notch in the wake of the 2008 financial crisis, where I just became immersed in learning these things on my own. I like to say self-education often has the highest return on investment. And I'm a self-learner. I don't have a background in Wall Street. I have never worked for any of these big banks or anything. And I'm self-taught. And I've really gravitated towards hard assets, specifically silver and gold, because once you learn how the monetary system really works, the answer is silver and gold. If they taught people in school how the financial system actually works, there would be riots in the street tomorrow, because it's unjust, it's unfair. And the idea that a private cartel can lend money into existence and then we pay it back with interest is morally not right, of course. And, that's kind of what got me fired up to this. I'm passionate about this, and I like equipping people to learn, because when you learn the rules of the game and you learn how to invest wisely, it can change everything. It can free up that time freedom to pursue life's higher callings, things of eternal significance, the reasons we're all put here on this earth. We're not meant to be sitting here staring at the markets all day, but investing wisely can make a big difference in our family lives, in our personal lives, and in our callings. So that was a little bit of a long-winded answer, but that's how I got into this.
Yeah, I like that. On our recent member webinar, you mentioned that putting dividend-paying stocks into the brokerage end of your investment portfolio can have a little bit of tax advantages over putting it into your Roth IRA. Now, with the caveat, you and I are not tax professionals here, so do not take this as tax advice. But what do you see that could be a little bit advantage of putting the dividend-paying stocks there instead of the Roth IRA?
Yeah, two kind of distinct questions there. First of all, for those unfamiliar, I'm a big proponent of a Roth IRA. If you have the ability to contribute, there's some income limits. I think if you're married, filing jointly, it's about $200,000 income. If you gross more than that, you can't really do a Roth. But I think they allow you to put $6,500 each for you and your spouse. And what's really cool about a Roth is you can contribute and you don't get any tax advantage now, but then it grows tax-free. All those capital gains over time, it's tax-free. And then the government's kind of out of your life. You've paid the tax man and they're done. So big proponent of starting that early. And a lot of people say, well, I don't want to tie it up in these government funds, in these retirement plans, because then you can't get it out. What's kind of cool with a Roth is you can take back what you contributed. You can't take back the, any capital gain. But if you put $6,500 in, you can take that back out if you want to. So that's kind of neat. And so the second part of your question there with dividend paying stocks, what's really cool about dividends, as of right now, under U.S. tax law that was signed into effect under George Bush, I believe, dividends are what's called qualified investments for U.S. stocks, and this is U.S. investors only, and they're taxed at a favorable, tax rate, 15% right now, which is much lower than, the taxes you'll pay on your earned income. So to me, I like to put those dividends in a taxable account. I'll put other things in the Roths because I expect to have much bigger capital gains. But for dividend investing, I get the tax advantage to not have it in a Roth. So that's my answer to that.
Okay. Okay. I did learn something recently with my tax guy in that if you make more than the allocated account, and I guess we're fortunate that we have that first world problem, you can put it into a traditional IRA, then convert it to the Roth
Yes.
IRA. And there's some loophole in the tax system that I don't understand, but he assured me that it's okay. And so if you do make a little bit more than those amounts, you can still take advantage of the Roth IRA. So
100%. They call it a Roth conversion, and some people call it a Roth conversion ladder. This isn't for everyone. It probably goes beyond the scope of this interview, but I do that. Whatever goes into my traditional IRA, because I can't do the Roth anymore. Yeah, you convert it over, and you pay tax as if it's earned income. So you pay the tax man at the end of the year. And by the way, I wouldn't be too surprised if that loophole, if you want to call it that, goes away at some point in the not too distant future. But I think that can be a wise strategy for a lot of people.
okay, yeah, the tax man always gets his.
Yeah.
Okay, Bikes wants to know how can you chart something that's manipulated? So he's basically talking about manipulation in the gold and silver markets.
Yeah, very, very fair question. I get that a lot. And some people jokingly call it manipulation analysis. So I agree. The precious metals are manipulated. And I don't think anything in the world is more manipulated in the financial markets than silver. And the thing is, they use the manipulators, the big banks, the commercial banks, they use charts. So knowing how they operate, you can use that to your advantage. They look at the 200-day moving average. They look at the 50-day moving average. They look at clear horizontal support and resistance levels. So you can almost use that to your advantage. Like, let's just say, for example, silver ran straight up. Right now, it's about almost 25 bucks, 24 and change. Let's just say in the next 2 weeks, it ran up to 30 bucks. The RSI, which is a indicator of how overbought or oversold something is, would be extremely overbought. And let's say we ran up to $30. Well, $30 is clear resistance. I mean, that's obvious resistance to everybody. That would be a opportune point for them to smack it lower. So you could use that, say, hey, I'm going to take profits here. We're overbought against resistance. If I'm thinking like a criminal, thinking like one of these manipulator bankers, this would be an ideal opportunity for them to smack it down lower. So, hey, I'm going to take some off the table or hedge with puts or things like that. So you can kind of think the way they do, and knowing that they use charts, they use technical indicators. So hopefully that answers that question.
Yeah, it does. I went to the Rule Symposium Silver Boot Camp, and I believe it was Jeffrey Christensen did an 1.5-hour presentation that I'll summarize in 20 seconds. And he basically said that, yes, the silver market is manipulated, just like all markets are manipulated, and it's manipulated to the downside and manipulated to the upside over the short term. So if we have a long-term outlook, like hopefully everyone watching this does, it really doesn't matter in the long term.
Yeah, I mean, I agree with what you just said. It doesn't. I mean, it's because people get hurt by it. The average retail investor doesn't know about the simple things like we're talking about now. Instead, they're buying. The average retail person is coming in and buying at $30 when it's overbought against resistance and they're about to smack it down. So it hurts people who don't know. But if you know this, you can use it to your advantage. You can also use, when they smack it down, like I think about fall of last year, 2022, it was down 17, 18, 19 bucks. I mean, and you can see in the COT data, you can see in the Commitment of Traders report that comes out every week, how these banks are positioned. It's not a perfect indicator, but it's pretty darn good. So you see them like in fall of last year, it was one of, I can count on one hand the amount of times that they've been positioned net long in the silver market. And last fall was one of those times. And sure enough, we went from, I think it was around 17 bucks up to 25, 26. That's a really nice move. These bankers, I don't want to say they manipulated, but they were positioned for the rally to come. So you can use that to your advantage.
Yeah, when all-in sustaining cost is $18.50 and the price is $17, it's not going to last there very long.
Right. Yeah, and silver is the only commodity on the planet that's less than where it was in 1980, and it's not just less than where it was; it's half of where it was. It's wildly undervalued, and market fundamentals always win. They tried manipulating it back in the 70s with the London gold pool. All manipulations always fail. Supply-demand fundamentals always win out in the end. So as long as you've got that time horizon and you're not leveraged up, you can use it to your advantage.
Yeah, you'll win in the long run. Okay. Question from BG. He's basically asking about SILJ, which is the Junior Silver Miners ETF, and SLV, which is essentially a warehouse full of silver that you can buy shares into. And he's pretty much saying that the silver miners are underperforming the metal, and the copper miners are outperforming the copper commodity. Do you have any insight into that as to why that may be?
Well, I can say that there's a lot of leverage to the junior mining stocks relative to the metal itself, with silver in particular. Silver is my real area of expertise, and I like how you said that the vaulted silver in SILV. I would say supposed physical silver in there.
I call it paper silver. Yeah.
Yeah, yeah, yeah. JP Morgan's the custodian, and it's interesting, that their vaults are located next to the COMEX, and there's all kinds of things going on with that. But to answer your question, SILJ is an ETF. It goes back to, I believe, 2008. So we don't have a tremendous amount of data, long history for that. But in 2016, silver had a really nice run from around $14 up to $21. SILJ went from, I think, around 3 up to 21. So they both peaked at 21. So that gave you a 1-to-1 ratio, right? They were both at the same price, right around $21, 1-to-1 ratio. Well, right now that SILJ to silver ratio is down around 0.3 something. So just to get back to where we were in 2016 on that ratio, SILJ would outperform silver itself by a factor of 3, by 300%. So if silver runs to 50, that's a double. That would mean you could expect somewhere around a 300% return in SILJ if silver were to run to 50. I think those are kind of reasonable guidelines on what to expect going forward. And like I said, it only goes back to 2008. I'm sure if we had data that went back further, you could expect even wider outperformance over the fullness of time. But if silver runs to 50, I'd look for about a 300% return on SILJ, give or take.
Okay. And any insight into the copper ETF as opposed to the commodity itself?
So I saw this question ahead of time, and I looked at the copper miners ETF, and it's right around its 200-day moving average, and the price of copper is also breaking out. So I don't see in the charts I'm looking at COPX, the copper miners ETF, outperforming copper by like a wide margin. I don't see. I can see that silver has underperformed, or excuse me, silver miners have underperformed silver itself. To the exact reason that's happening, I'm not sure. Maybe it's that silver is more volatile. It's a more thinly traded market. So, when we're down, prices down in the doldrums, silver miners underperform, and I bet they'll slingshot higher on the next push up to 30 plus silver.
That's literally what we're betting on.
Yeah.
Okay. Do you have any current thoughts on the jurisdictional risks of Mexico? Expectations, future mining in Mexico. They're one of the biggest employers in Mexico, hundreds of thousands of workers, mining about 200 different companies in Mexico. Why is Mexico handcuffing one of their biggest revenue sources?
Yeah, I mean, it's just what governments do. If you give them an opportunity to make a terrible decision, they'll do it every single time. Yeah, South America and Mexico is becoming an increasingly risky jurisdiction for sure, and in particular Mexico. So this isn't a surprise to me. I've expected this for a long time, not just Mexico specifically, but jurisdictional risk everywhere. I think is, especially as silver really gets moving, you start getting to $50, $60 silver, that jurisdictional risk, it's going to be very enticing for these greedy governments to put in, increased tax rates or all kinds of things to kind of take profits from these greedy companies, So the way I mitigate that is my long-term exit strategy. And without going into all the details, I expect to see triple-digit silver over the longer term. And as that unfolds over the years ahead, the exit strategy is to de-risk the portfolio as the bull market matures. So as we de-risk, I'll be cycling profits from more smaller cap names, explorers, developers. I've already exited those, but smaller cap companies into more physical metal and more into blue chip dividend players and large royalty plays. So all that to say, once we run up to $50 silver, I plan to take a lot of profits off the table in my mining stocks, which will reduce my exposure to not only Mexico, but a lot of these jurisdictional risks, and allocate more towards the big names and physical metal.
Okay. Okay.
So what I'm betting in on is that we get a run towards 50 before they get too crazy and like start, nationalizing mines and things like that. And I think that's very likely to happen. I think we see $50 silver before they start, nationalizing mines or, making the taxes so burdensome that the companies can't be profitable.
Okay. All right. Prigler and Special and Ciara kind of asked the same thing. You just briefly touched on it. They're essentially asking Wind Moon 2023, 2024. We'll call Wind Moon $100 silver.
Sure. So I first of all, I don't know, but what we can do is look at historical data. And if I look at the last two big bull markets in precious metals, the 1970s one and the one from 2000 to, let's call it 1999 to 2011, thereabouts. And if you average not only the duration of those bull markets, but the returns, the average duration is is 10 years, not about 10 years. It is 10 years. So if you look at the bear market lows in silver, it was December of 2015, right into that was the first rate increase by Yellen at the time. That was the bottom. So if you call that January 2016 was the low, 10 years, that gives you January 2026. That's a ballpark figure. You can give or take a year on the other side of that, but that's the average duration of a precious metals bull market, about 10 years. Now,
okay.
If you look at the percentage
could
return,
you share your screen with the silver chart, and then that'll kind of give us a visual representation of what you're talking about. I mean, it is pretty impressive. It's just a giant U,
Yeah, and on the shorter term chart, since I have it pulled up, I mean,
Okay.
I like this nice bullish channel here. You see higher highs, higher lows. That's a bullish channel above the 200-day moving average, working our way towards the apex of this triangle pattern. You'll notice I keep my charts very simple. I used to fill them with indicators and oscillators and all this stuff, and it turned out to be just noise. And we're talking about manipulation before. I guarantee you the JP Morgan traders and other, you might want to call them criminal bankers, they're looking at lines very similar to this. They see this channel, they see the 200-day moving average. So I thought I'd mention that while I had it up. But yeah, let's pull up the longer term chart for silver. There we go. Well, I'm not sure why TradingView is acting up and not giving me the long-term data. Like it should go back all the way to here.
Okay.
To the 70s. I mean, that's bizarre. I've never seen this, but normally it'd be price data right here. So you got this big cup and handle pattern. And here we're carving out the handle. And the way you get measured move targets from these patterns, there's three kind of common techniques. So this is the resistance, right? 49.82. That was the 2011 high.
Yep.
And you look at the bear market low, as I hover over this candle, was $11.64. So let's call that, just for easy math, a $40 difference between the low and the high.
Yeah.
So you can kind of flip that. Say once you get through 50, 49.82, add 40 to that gives you $90 silver. A more common way to do it would take this, the cup portion, and kind of flip that over. And that gives you more like $100 silver. And those are just using measured move targets on a, non-log on a, it's different if you use a log scale, and you can even get higher numbers. I wish this chart was coming in more accurate. I'm not sure why I'm missing that price history right now.
Okay. Let's see. Okay, on to company questions from Zara. What are your thoughts on the company Wheaton Precious Metals? If interest rates go into a higher for longer environment, how will it affect precious metals prices? Is it still a safe haven?
Yeah, I think it is. Not to paint too rosy of a scenario, but I see it as a win-win scenario for precious metals, whether they continue to hike or not. Because if they pause and eventually revert back to debt monetization and quantitative easing and all those things, which I think is the more likely scenario, inflation is going to come roaring back, and silver and gold are the prime beneficiary of governments debasing their currency. Always have been for thousands of years. Now, what if they keep raising rates? I mean, this is already the most aggressive rate hike campaign in history of the Federal Reserve. So it's not sensational to say they're going to break something. I think even if they pause here, something's going to break. Combine the most aggressive rate hike campaign cycle with the most levered economy in all of history. I mean, I'm not being dramatic. It just is. The United States is the most indebted government nation that's ever existed. So combine that with this aggressive rate hike campaign, it's a literal recipe for disaster. So if something breaks, let's say more major banks fail, like big ones, which I think is a very likely outcome. Well, how's the Fed going to respond to that? Are they just going to sit by and watch it all burn to the ground? They're going to go to debt monetization on steroids. It's going to make the COVID lockdown and COVID stimulus plans and all that look like a walk in the park. And if they don't, let's just say they do let it burn down. Well, where are people going to turn for safe haven? They're going to look for physical metals stored outside of the banking system as the ultimate safe haven. So I think the precious metals win either way. As far as Wheaton Precious Metals, yeah, that's probably my favorite stock to hold, just to sit on and hold. I love the royalty and streaming business model. I like that management team. It's hard to go. I think it'll outperform the ETFs. I mean, it's not like 10 bagger potential like some of these juniors, but it's one you can sleep well at night holding, and it's got a lot of leverage to the price of metals when they start moving. And it's got a growing dividend too if you're a dividend investor. It's only about 1.5% yield now, but they're growing that thing about 10% every year.
Yeah, we like that company a lot.
Mm-hmm.
Okay, from Corolla, what are your thoughts on First Majestic's leverage to higher silver prices?
Yeah, historically, First Majestic has had one of the highest, if not the highest, the most leverage to the price of silver. I don't think that's going to change. You could have made the case, hey, well, now they're becoming more of a gold miner with Jarrett Canyon. They've since suspended that. And Keith Neumeyer has made it no secret that they're a silver company and he's bullish on silver. And we've talked to them and their investor relations people, and they've indicated their next acquisitions are going to be silver miners. So I expect that leverage to silver to continue. They've had their share of problems over the last few years. No way I'm not going to sugarcoat that. They've lagged. They've been an underperformer, but I think the prospects are still very, very bright for that particular company.
Okay. From JFK, regarding Pan American Silver. So they've got their Escobal mine that is basically sitting dormant, and hopefully it comes back online, according to Rick Rule, that is not priced into the stock.
Yep.
Do you see Escobal coming back online for Pan American Silver? Do you have any insight to that?
Well, I don't have any special insight, but I agree with Rick Rule that the market is kind of discounting that possibility. So I like the asymmetry of Pan American right now because it's essentially priced as if it's not going to come back online. So if it doesn't, it's already priced in. Well, if it does, I mean, that stock's going to have a really nice pop. Escobal is in Guatemala. It's an operation with they've invested over $500 million in this mine, and the Guatemalan government shut it down over environmental concerns. And I think it's in all parties' best interest for that mine to come back online. And they're in phase 2 of 3 right now, consulting with the government to come to an agreement to get it back online. And I'm optimistic that logic and reason will prevail, although that might be a bad assumption when dealing with governments. But I am optimistic that they'll come to an agreement and get it back online. I think it's in everyone's best interest, including the government's.
Okay. From Albatross, do you have any comments on Reyna Silver and do you have any comments on Reyna Silver and GR Silver?
Well, I have general comments, I guess, on explorers and developers as a whole. I think a lot of people are overexposed to explorers and developers. When silver runs, those things are going to be like firecrackers. I mean, they're going to go and it's going to be fun. But you have to get the timing right because they're like ticking time bombs. They don't have any cash coming in. They don't have any revenue, and they're constantly needing to explore and develop and dilute shares and raise capital. So personally, I don't like the risk reward ratio of the explorers and developers. I like, if I'm going to speculate, which I do, I speculate, I'm a big proponent of speculating in these mining stocks. I like smaller producers with exploration potential. I think that's a more favorable risk reward profile because they've got cash flow, but they've also got exploration projects going. So plenty of upside potential with less risk of shareholder dilution and those kind of things. That said, these explorers and developers, they're just beaten to a pulp. So they're cheap. I mean, if you like them and that fits your risk profile, I like Reyna. I'm not as well versed on GR Silver. I used to own Reyna, like the management team. Dr. Peter McGaugh, it's hard to bet against him. But in general, the explorers and developers really aren't for me.
Okay. From Kyle Smith, is Barrick Gold a buy here at its present price? 3 years ago, it was double what it is now. What do you think?
Yeah, these gold seniors, Barrick is the second largest gold miner in the world behind Newmont, and then Agnico Eagle is the third. I much prefer Agnico Eagle Agnico Eagle is my favorite senior producer. Newmont is my second, and I think Newmont is just a much better at a much better entry point right now. It was up near $70 last year, and now it's down in the 30s. So it's been cut by almost half. Yeah, they've had their share of problems, higher input costs, and they're having problems right now with labor dispute in Mexico again. But Barrick is my least favorite, so I don't track it as closely. So I don't have any particular comments on Barrick, but I do think, I'm sure, as being the second largest gold miner in the world, it's going to move when the sector takes off. So it's hard to go wrong with the big names, but I prefer the other two.
You like Agnico Eagle and Newmont. Would you be able to share your screen with those companies?
Yeah, absolutely. Yeah, Newmont here. We'll just zoom out to like a longer term monthly chart. So you can see long history. This company's been around for 100 years. So I don't think they're going anywhere anytime soon. But yeah, you can see this one got up to $71 in April of 2022 as the Ukraine war was kicking off. And I mean, just look at that brutal downtrend. Yeah. From 71 down to currently sitting at 37.84 is the low for this month. So down by about half, just call it half. But you're sitting right at major support. And you've also got a little bit of trendline support here. I think this is a very favorable entry point for Newmont in particular. I've been scaling into this one myself. I mean, that doesn't mean it can't go lower. What charts do is they give you a slight advantage. If you don't need to predict the future with like some high level of accuracy, but if you can have just a little edge over the rest of the marketplace, that edge compounded over time can be a big advantage. That doesn't mean we can't just fall through support here. That's possible, although it's unlikely. I like to say I deal in probabilities, not predictions. I think the probability is that we carve out a bottom right near our current levels, and there's much more upside potential than downside risk, put it that way.
Yeah, I mean, you can just see how much it went up there for the war premium.
Mm-hmm.
You know, what is it? That's a huge move.
Yeah. And I don't chart ABX, so it's not going to be, or that's Barrick. It's not going to be all as pretty as the other one. But this one, it got up as high as the high was $32, and we're down at 21. So, it's not cut in half like Newmont from the highs of last year, but it would have to rise by 50% to get back to where it was.
Yeah. Okay. And then Agnico Eagle?
Agnico, just because it's such a well-run company, it's not quite as beaten down quite as much as the others, but I really like it. I like dividends with these big ones. Barrick's got a smaller dividend than both Agnico and Newmont. And so I like getting paid to wait. If you're getting a 4% yield, that's really nice. Nice paycheck that comes every quarter as you're waiting for gold to do its thing and the precious metals to run. There's Agnico Eagle.
Oh, there we go.
Yeah. So you can kind of see this downtrend channel, like most of the sector. Had this big peak back in August of 2020. That was when gold went up to $2,089 and right near 89. And here we are down at 48. So it would have to almost double to get back to where it was in 2020. Like I said, it's hung in there a little better than some of the other ones.
Yeah.
The big names.
The dividend's pretty compelling though.
It is. And, something I'm still getting the details on myself, but they've got very few companies offer this. They've got a dividend reinvestment program through the company where your dividends can be reinvested for a 5% discount. So every quarter, the dividends are paid. You can elect to take your dividends as a cash payment and just get a paycheck, but it's even more powerful if you reinvest those dividends, and they incentivize you to do that and give you a 5% discount. So imagine every 3 months you bought Agnico Eagle, and every time you buy it, it's down. It's like the stock being down 5%. That's a really nice kicker for that company.
And you have to sign up for that through their website, or will it automatically do it when you buy it through your brokerage account?
No, yeah, you have to. That's the kind of the downside. You have to jump through a few hoops. It's not that big a deal, but you go through the
Okay.
website and you set up an account. I think they use Computer Share. You fill out a couple of forms, and it's not like on your E-Trade. It's a separate thing you have to do.
Okay. Okay. But still, we're going to be holding this for the next several years, so it makes it worth it. Okay. Barrick Gold. Let's see. Sibanye Stillwater question. GGM. Will Sibanye Stillwater be able to continue paying a 7% dividend?
I think so. If I remember right, I'm doing this from memory. Whenever you're investing in dividends, you want to look at what's called the payout ratio. And I believe their payout ratio is around 35%, 25 to 35%. So some of these payout ratios get up to like 80, 90%. And that tells you, hey, the company's paying out all this cash, which is nice, but there's not room to either grow it, and there's not like a buffer to, during downturns. So they're not paying out like this massive payout ratio. So I think there's room for them to withstand some continued headwinds without cutting the dividend. That said, that is a risk. I'm not going to say they're definitely not going to cut it. They could cut that dividend. But I look at this one as a longer term hold, probably 5 to 10 years. And I'm willing to hold through that. And my investment case for Sibanye Stillwater is they produce all the things the world's going to need over the next 10 years. Over the next 10 years, we're going to need more copper in the next 10 years than the world has consumed in all of history before this. They're a big copper producer. The world's going to need uranium. They've got uranium mines. They've got gold mines,
Platinum.
platinum and palladium, platinum group metals. All these things are going to be in high demand. And the reason the primary reason the stock is down so much is they've got a lot of operations in South Africa, which is having a lot of problems right now. There's electricity is being rationed, so they can't run their operations like continually like they'd like to. So electricity is being rationed. They're actively trying to build out solar, but there's still a lot of unrest going on in South Africa. The taxi drivers are going on strike. I believe that was about to happen. That was about a week ago. I read that, which has a big impact in South Africa because I guess that's how they what the primary mode of transportation is taxis. So a lot going on there, but the good news is they're diversifying out of there as aggressively as possible. And if you've got a longer term time horizon, I like to buy stocks when they're just beaten down to a pulp. And look at this one. It was $19 just last year, and now we're down to $7.
$7.
Yes, and it was
Yeah.
it was a brief period here. You get it low sixes and even below 5 if you were really nimble. And they pay you a really nice dividend. I think it's around 8 or 9% while you wait to get that really nice check. They pay theirs semi-annually. Most pay quarterly, but you get paid a check every 6 months to just wait.
Yeah. Yeah. What would you be able to bring up the platinum chart? I like platinum, but you love platinum. Can you kind of give us your base case for platinum?
Yeah, there's so first of all, platinum is used in diesel catalytic converters. That's one of the primary where a lot of the primary demand comes from.
Mm-hmm.
And back in, I think it was 2014, Volkswagen had what they called Dieselgate, and kind of the world swore off diesel for a little bit. Diesel engines were vilified, which hurt demand for these diesel engines, which hurt demand for platinum. But I think that is so much more than that. It got so overdone, kind of like uranium got way overdone on the downside following the Fukushima. I mean, it took a long time, but I mean, uranium went from 6-figure, triple digits down to, $18. That was just way over. It made no sense. I think similarly, platinum went to a ridiculously low valuation and still there. So three investment cases for platinum for me. One is the simple undervaluation relative to almost everything, including gold and silver. I mean, the vast majority of the time, platinum trades at a premium to gold. It's more expensive.
Yeah.
Right now, it's not only half the price of gold, it's about half. Or excuse me, it's not only less than gold, it's about half the price of gold. Yeah. So I'm a big, I believe in mean reversion. And not only when things get so out of whack, they don't not only revert to the mean, they overshoot to the upside. So I think platinum has the potential to really outperform gold by a wide margin. Number two is substitution. platinum is typically more expensive than palladium. Palladium is also used in internal combustion engine catalytic converters, but you can easily substitute that for platinum. And why wouldn't you? It's, about half the price of palladium too. So I think we're beginning to see that substitution happening. We saw it in China's import numbers last year. They started importing a lot more platinum, indicating they're probably going to start substituting platinum for palladium in these catalytic converters. And then, the third case, a little bit more speculative, is you hear a lot about hydrogen fuel cell technology. And whether you believe in it or not, money is going into it. Big corporations, Hyundai, big, mega cap corporations and governments are investing in this technology. And the fact is this technology requires a lot of platinum. And I think that's a kicker that's being underappreciated by the market. I mean, just the whole commodity complex has been down the dumps for so long. It's like, who's looking at platinum? Well, when they do, it's such a thinly traded market. It's got the potential to really fly. So I like a healthy allocation. For me, it makes up 20% of my physical metals. And the plan will be to swap some of that for gold when the ratio normalizes.
Yeah, once you can get 2 gold coins for 1 platinum coin,
Yep.
I think that would be a great deal.
100%.
Another case that I like a lot is that most of the world's platinum comes from
Yep.
Russia, South Africa, and Zimbabwe.
Mm-hmm.
And the way our governments are throwing sanctions around, I
Yep.
could see politicians sanctioning these countries having no idea of the platinum market,
Yep.
and us benefiting from that through our physical bets.
100%. Yeah. Unintended consequences. Yep.
Right. Yeah. Can you pull up the platinum to silver chart and then the platinum to gold chart so that people can kind of get an idea of this ratio that you're talking about?
Yeah, sure.
Because it is I mean, it's like I probably say once a month, you want to buy at the bottom end of the graph, not at the top end of the graph. And,
Right.
and this just absolutely exemplifies it. I mean,
Yeah. Here
look
we
at
go.
that.
Yeah. Yeah. So you can go back to, when you can swap, I believe there'll come a day when we return to this ratio where you can swap 1 ounce of platinum for 2 ounces of gold.
Yeah.
Right now, see 0.5. It's exactly half the price of gold.
There you go.
And look, I mean, this chart goes back to 1993. So it's at about 30 years.
Yeah.
And you can see historically undervalued. I mean, and you're carving out this little triangle pattern here too, which once we break out above this resistance line, you can see a really nice move.
Yeah. 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 And all it takes is just, oh, we're sanctioning Russian platinum. Boom. That's overnight. It's just gonna take off.
Yeah.
And here's the platinum to silver.
Yeah. Let me see if this is make that one a log scale. Yeah. So I mean, I'm as big of a silver bull as you'll ever find. So it's almost treasonous in the silver community to be like, hey, something could outperform silver. But you could make a case that platinum could outperform silver. I mean, the ratio suggests it's historically undervalued. It's got that potential. I'm just trying to see if there's a channel here. Yeah, it's not perfect, but get rid of that text. Yeah, so you can see sitting right at, I mean, extremely undervalued relative to silver. You've got this very clear resistance line that goes back 15 years.
Mm-hmm.
And getting above that, and you've also got this big horizontal resistance here, which kind of coincides. It's going to be a tough nut to crack getting above that, but if and when we do, I mean, it could outperform silver.
Yeah. 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 I like platinum a lot. There's just so many things that could, like you said, there's only, I think 7 million ounces a year produced in China at the beginning of the year, bought 1.3 of that.
Yep.
Off the market, not available.
It's a tiny market. When it goes, I mean, it can just fly. And there's precedent for palladium, which is very similar, dynamics. It was a couple of years ago. The price of palladium just went through the roof, and the bankers were they were short, and they kind of got overrun. So that gives hope to us silver investors too.
Yeah.
They manipulate it. Well, if they get overrun, and when they get overrun, if they're not prepared for it, the price can really, you can see a short covering rally of epic proportions. That's what happened to silver, by the way, in 2011. The bankers were caught off guard. It's one of very few times that's happened, but they had to cover their shorts into a rising silver price. That's very rare for them to have to do that. And it's possible that happens with platinum as well.
And not a lot of fun for them.
Yeah.
But fun for us.
Yep.
All right. Okay, let's move on to uranium. Can you pull up just the commodity itself?
Yeah, I would love to. I just posted one to Twitter, and I'm working on a little report for the members to post this afternoon at SilverChartist. Uranium is
Uranium's
breaking.
had a nice little run up here. I think for the last, it's either 7 or 8 weeks, the spot price has just been ticking up, and it's getting kind of exciting.
It is. It sure is. I mean, it's breaking out. Okay, yeah. So these are monthly candlesticks. This goes back to 2008. So you can see uranium's been as high as $148 back in 2007. And the supply demand fundamentals were not as bullish as they are now. I'm not saying we go straight to 148. I mean, I'll be scaling out along the way, but I think we're going there. But you can see these are monthly candlesticks. So 1, 2, 3, 4, 5 months in a row of green candles. And you can see this triangle pattern. So we're breaking out. The next stop, the next resistance is the previous high going back to last year of 63.85. Right now we're at 58.45. So getting within striking distance of that next resistance. One thing to watch is the RSI, Relative Strength Index, just as a gauge of like, hey, how overbought are we getting here? And not quite there yet, but if we go straight to 63 in the next handful of weeks, we'll probably be due for a pullback, and then that would be an opportunity to scale in further if you're so inclined to add. It could be a profit-taking opportunity too once we get up to 63.85. And one more quick thing I'll mention here while we're talking about ratios, I like to look at the ratio chart of uranium miners relative to the metal itself. And we're kind of pounding the table on this over this earlier in the summer when your miners were just beaten down relative to the metal itself. The metal was hanging in there just fine, but the mining stocks were just taken to the woodshed. And here's that support of that ratio. So this is the Sprott Uranium Miners ETF. If you're a gold investor, it's kind of like the GDX equivalent versus the metal itself. And you can see this clear support. So kind of in here is where we're saying, hey, this is, pretty compelling opportunity. And now we've had 3 consecutive months where the mining stocks outperform. There's still room to run.
Yeah. I've noticed that my SPUT account is doing better than my URNM account. And, I think that will eventually reverse. But it looks like we're on a trend for that.
And I'll show you a quick chart for URNM if it's cool with you. Let me get back to weekly candles here. Yeah, there we go. Yeah, so back in here for we did a couple of reports for members here just saying, hey, we're testing support. I call this the Best Buy uptrend line, 2020 uptrend line. And every time we test, see, this is an example of where just simple technicals, they don't always work, but in this case they did, and they gave me a nice edge. We were able to scale in right along this support line. And then you've got this very clear resistance. I mean, crystal clear. We broke out, back tested it, and now we're running. So uranium miners are up really nicely from their lows. They were down to 28, and now we're up at 38.
37, 38. Yeah.
It's a 30 something percent move just over the summer.
Yeah. I like that one a lot. Scott is asking about Global Atomic. Can you pull that one up?
Yeah, I can. For those unfamiliar, Global Atomic, they have the DASA project in Niger. Niger recently had a coup that was successful, so the elected government was overthrown.
I just saw it. Go up to the next.
Oh, thanks.
There you go. So that's the coup.
Yeah, right here.
Red candle there.
Right there. These are weekly candles. So dropped 34% in a week, and then the next week it was down another 23%. To make a case, we're carving out a bottom here. So in Niger, there's been 4 or 5 successful coups or coup attempts in the last handful of decades, and uranium mining has continued. You can make a case, hey, this time is different. I'm not an expert on all of that, but this looks like it could lead to kind of kinetic warfare, and it could escalate from here. But you can also make a case, hey, that's all priced in. They've got a fantastic project, that DASA project. It was scheduled to go into production, I believe, in early 2024. So it was like right there. They just needed like one more round of financing. Well, now who's going to want to finance, a company that's got their project where the coup is happening, So that's the obvious problem with Global Atomic. I honestly don't know how this is going to work out. I made a case for our members when this happened. Hey, you can make a case to buy it, to sell it, or to hold it. And I think it depends on your risk tolerance, how much allocation you have to this particular stock. Now, I wouldn't want to be overweight this stock, but if I had a small percentage, you might consider holding it. If you've got a lot of cash and a very high risk tolerance, hey, maybe you could throw a little gambling money at it and add to it. And if this resolves favorably, I mean, the stock's going to fly. But very high risk, high potential reward for Global Atomic.
Yeah, we asked Rick about this, and he basically said that, those pounds in that yellow cake is going to go somewhere. It's not like it's going to go to uranium heaven.
Yeah.
But the risk basically is your government going to allow you to invest in that one, depending on whoever gains control of that jurisdiction.
Yeah. And then do you hold on to, it comes back to the explorers and developers. Well, they do have cash flow from the partial owner of a zinc mine in Turkey. So they do have cash flow, but that's not enough to get the project, to completion. So that, minimal cash flow coming in with, they still need quite a bit of capital expenditures to get it into production. So do you want to sit and wait through that? I don't know. That's something individuals have to assess. I can't tell anyone what to do, but I think you can make a case for each, but I view it as very high risk, high reward at this point, unfortunately, because it's such a well-run company and a fantastic project. I really hope this turns around for them.
Yeah. The last stat I saw, I think 4% of the world's uranium comes out of Niger, so it's not a small deposit. Okay, from Melt Up Mike. Does Steve plan to sell uranium producers at some point and move funds into URNJ or individual explorers?
Hey, Mike. Yeah, I know Mike. He's pretty active on the site. Appreciate the question. No. My long-term exit strategy, just like I mentioned for silver, it's the same for uranium. I think it's smart to de-risk the portfolio as the bull market matures. So rather than cycle into explorers and developers, if I had those, I'd be cycling out of them, which I do. In uranium, I do have some of those. So the plan would be to cycle out of those into the more safe names, the Camecos, URNMs, Sprott Physical Uranium Trust.
Okay. And then basically crystal ball question from Nautica, exit strategy for miners and all metals. Like you kind of went over your silver one, basically, once we get up to about $50, there's a lot of resistance built up around there because it's never passed that before. So I completely agree. I think that's the time to get out of a big position of those. And what about gold and what about platinum and uranium?
Yeah, my big picture, without getting too into the details, because it would be too long of an answer. But yeah, silver, when it runs up towards 50, gold somewhere around 3,000. Yeah, I'll be taking. So I've got different buckets for investing. I've got a speculative bucket and then like a longer term investing and dividend bucket. So that dividend bucket has some big names in there. Wheaton Precious Metals is one that we talked about before. I'm holding those through the wild volatility that's going to come over the next handful of years. So I'm not like I'm going to sell all my miners. I'm going to keep meaningful exposure. But once we get up to 50, I'm going to sell the vast majority, if not all of my speculative, speculations, mining stocks, and cycle those profits into physical metal or royalty and streaming plays, the big names. Then, the next thing is, all right, we're probably going to have a big pullback and then punch through $50 and run towards, exceed those all-time highs by a wide margin, triple-digit silver. So how I think about exit strategy for physical metal, it depends on your position size. But for me, I want some as a generational insurance policy for my children and their children's children and so on and so on. So I'm never going to sell some of it. Although there's going to come a point where the physical metal is way overvalued and, dividend stocks and real estate and things like that are undervalued. And that's when I'll swap some of the metal for those other things using historical ratios. Like bull markets typically peak around a Dow gold ratio of 1 to 1. 1980, gold peaked at 850. The Dow bottomed at 850, 1 to 1 ratio. Would have been a fantastic time to swap a little bit of gold for some stocks. As crazy as that sounds now. So that's my exit strategy in a nutshell.
Okay. What about platinum? Are you waiting for a 2 to 1 on that? What do you think about platinum?
Yeah, the strategy for platinum is to swap it for gold. I'm probably not going to wait until we get all the way to 2 to 1 to just swap all of it. Maybe get to 1.5 to 1 and swap a few ounces and just kind of do it incrementally, but nowhere near current ratios.
Yeah, kind of trim as it gets closer.
Yeah, exactly.
Yeah. Okay. Yeah, I feel the same. And what about uranium? Are you looking at specific price points?
I am. Yeah, and I can do it from memory. Let me see. Am I still sharing my screen?
Oh no, go ahead.
Yeah. Yeah, but I can do it from memory, but it's better to visually show it. And I'm going to use common sense. So as each of these resistance levels is approached or tested, I'm going to ask myself, should I take some off the table here?
Yeah.
The answer might be yes, might be no. So the next one is $63. We're coming right up on that, getting pretty darn close. 63 in uranium. So as we get there, I'm going to ask myself, let's look at the technicals, the fundamentals, how overbought are we in the short term? Should I trim a little bit? And, for me, I was fortunate enough, and there is some luck involved here. I happen to have a decent amount of cash in the COVID crash of, March 2020. So that's where I got most of my uranium miners. So I'm up, a big, multiple, 300-400% on a lot of them. So I'm going to look to take a little bit off the table as each of these resistance levels are tested. So 63.85, ask myself, should I take a little bit off the table? Maybe yes, maybe no. 73 is the next resistance. Ask myself, should I take some off the table? Yes or no? And then 100 is pretty big resistance. You've got this big gap here.
Yeah.
And then from there, you got the lower edge of the gap. We're on 129, and then 148 is the previous all-time high. By the time we get to 148, I'll probably be more than I'll have liquidated over half at least of my positions in uranium miners, while keeping some for what I think we're going to go to new all-time highs. But I don't want to get too cute with it. I just want to scale out over time. I'll have, if we go to 148 uranium, I'll have life-changing gains. So the last thing you want to have is not mitigate downside risk. What if 148 is the top again? And, you don't want to give all that back. So I'll be scaling out incrementally.
Okay. Awesome. Well, thank you very much, Steve. I can't recommend SilverChartist enough. It is an amazing website. You guys have the model portfolio with buy points for each one whenever something comes up, just like today you sent out something, hey, we're selling this, we're buying this. It's a very transparent and just an awesome website. I use a lot of the material that I get off of SilverChartist for this show. I can't thank you enough. Keep up the good work, man.
You bet. Thanks for inviting me on. It was a great talk, and would love to chat anytime.
Yes, there will be a link in the show notes if you want to join us over there. And Steve, thanks again. And thank you for tuning in. Hit the like, subscribe, support the show, and we will talk to you next time.